Hello, everyone. Welcome to this week's edition of the Grain Gauntlet. Once again, this week I have Hedge Plus owner Patrick Hayes here, ready to tackle this week's 5 questions. Are you ready to go?
Ready to rock.
All right, here we go. First question. Do you think it's likely that farmers plant a lot less corn this year?
I think with rotation, they will plant less corn acres, so talking 2 to 4 million less. 2 will still be a really high number. 4 would be more reasonable. I think they're going to plant a good amount higher than normal. So I kind of like the 2 million estimate lower.
The only thing I'd have to add is I think last week saw a study that suggested that the cost to plant soybeans versus corn might make the reduction of corn a little less likely or less than people might be expecting. It just still seems to be more financially sound to plant corn for farmers. At least that's based on projections.
Yeah, that kind of supports what I just said. Yay!
Definitely.
Now, on top of that, I think farmers feel they have more control with corn. We aren't as dependent on China with exports to them with corn, so we got more domestic demand. That's for sure. I think there's more avenues to use corn than soybeans.
Okay. All right, next question says, what's the best course for my March basis contracts for corn? Roll them or price and reown?
Don't know yet. We're not there where we have to make that decision. We have a basis contract for soybeans that we have to lock in at between now and the end of February or make that decision. Well, we're at this price. I always prefer buying back because you can measure risk and reward. How much risk you want to take, go after. If you want to go after 50 cents, maybe you can get away with 10 cents of risk. If you want to go after $1, it'd be more, but you have the ability to control through the amount of risk you want to take what you're going after. And if we get a rally, that's great. With cash crop, if you roll it, the futures are open. But you're taking a big hit with the carry. Once they take the carry off the basis you got, and that makes that basis contract kind of worthless. Too expensive to do it that way. I think buybacks would be the way to go.
All right, good. If March soybeans climb back in the 1080 to 1090 range, should I pull the trigger on some sales? Again, basically, do you think that's a good price?
Yeah, no, it's a stinky price. $12 is a good price, right? But it doesn't matter if it's stinky or good. What matters is what are you going to get this year? We have basis contracts, so we get up to 1080, 1090, $11. I will pull the trigger on making the recommendation lock in the future side of that basis contract. And maybe then we'll look at adding 50 cents with something fixed risk. The goal will be to get an okay price and then take the risk out with having a fixed risk buyback to target a specific reward.
Okay, good. Is yield at loss a given down in Argentina, or is there still time for rain to arrive and produce a great crop down there?
Well, rain will always help. Some damage has been done. The longer the drought goes on, the longer the heat is there, the more the effect will be. It's that simple. If we don't have any rain the rest of the marketing year, it's going to have a devastating effect. If it rains in 2 weeks, the crop will be worse than it is if it rains tomorrow. But right now, the forecast is going for hot, dry. So yields are continuing to deteriorate. It's just like every year. The longer heat and dryness happen, the more wrecked the yields get. Once we get rain, it can stop the deterioration to some extent.
It'd be safe to say that there's some damage there already, and that it's priced in a little bit too.
Yeah, I think I don't think the market's reacted enough to what's happened in Argentina so far. I think that will start to accelerate if we stay dry for another couple weeks.
Okay, all right. And final question. This one's from a prospect. says he just sold some soybeans and wants to buy them back, but he's not feeling bullish, does it make sense then to short the market to try and add some value?
I love shorting the market to add value. You know, there's two ways to skin a cat. If you make a sale and you want to do a buyback, you can add profitability that way. But you can also wait till top is in and buy it back by selling it, right? By hedging it. It's safer that way because you're protecting the price and all the bushels that you haven't sold for the rest of last year's crop and whatever wasn't sold for the new crop yet. So it's way safer to hedge it and add value after a sale. However, you want to be very sure that you're close to a top. We're at a seasonal trend time of the year where we don't usually see a big move down. We're at the lower end of the trading range where I don't expect us to see a big move down. So I would want to have a high in place, a spiked high, before I would sell to try to add value. Either way, if you buy it back or you sell it to add value, you have to be right in the direction. And the best time to buy is at the lows, and the best time to sell is when you see a spike high. We don't have a spike high right now, so I wouldn't be selling to add value to previous sales.
Okay, sounds good. All right, well, that's it for this week. Thanks again for all the questions, everybody. If you've got a question you'd like to hear answered, go ahead and just talk to our guys. Tell them that you'd like to hear it on the program, or email it to adminstaff@hedge-plus.com. Aside from that, thank you, Patrick. Everyone have a great week.
Have a great week, everybody.